Good afternoon, everybody. Welcome back to my channel. It is me, the Millennial Investor, 1914. Holla at your boy. The reason why I'm excited, partially I'm excited is because what you'll see is the market is in a free fall. It's Trump with the tariffs and uncertainty. So at one point, my portfolio was at 75,000, and I'm all the way down to 66,700. I know you're like, Cadero, why are you smiling? Why are you so excited? Okay, I'm excited because when you look at my portfolio, uh, one of the stocks that I'm riding hard with is not only do I am I implementing a strategy of total return, but I'm also implementing a strategy of dividend growth, getting paid dividends, want my dividends to grow along the way. And I just hit $5,000 into the ETF of SCHD. Now, I'm going all in to SCHD outside of my growth plays. So my growth plays, I'm going all in Tesla, NVIDIA, Meta, TSM, right? Those are my growth plays. But me getting paid money, dividend growth, uh, something ETF that I've just been buying a lot that I want to, now I just hit 5,000. Next goal is for it to hit $10,000. Then from 10,000, 20,000, 100,000, so that in 20 years I want to live off of it. I'm going in on SCHD. Also, you see I'm investing to SCHG. That's my growth play as well. But I just want the dividend growth play. In my portfolio, I have the Visas and I have American Express, Aflax, and I have SCHD. And I'm loving this tasty 3.65% yield. But let's peel the onion a little bit further. Why do I like SCHD? This article with Mamali Full states here that one of the key points, he says, thanks to my father that I got the investing bug rather early. Although I always wanted to own individual stocks, but the value of the ETFs for dividend investors is hard to ignore. Why do people like ETFs or ETFs like SCHD? Right here, it says, I'm emotionally locked in, but you don't have to be. Usually when you are investing into stocks, high rate of return, but also high rate for you to bust. But when you invest into ETFs, you have a bigger pool of basket of stocks. What does SCHD would do? It only looks at companies that have increased their dividends annually for at least a decade, 10 years. Excludes REITs. That's a sweet spot right here. It has a valuation of 28.2. At this time, it said it has a 3.53%, but because the market has been falling a lot, it's been roughly 3.65% here. Also, let's peel back the onion and let's take another, take it to another level. SCHD. This simple dividend ETF could turn $500 a year into $10,000. The Schwab U.S. Dividend Equity ETF lets investors buy one investment that invests the way they would in a portfolio of individual stocks. This exchange traded fund has returned roughly 12%. Just say since its inception, let's say like roughly 10%. If you started $500 and kept putting that money into it annually for a decade, this ETF could build you a $10,000 nest egg. Let's pull back this article further. Growth. The next step is to create a composite score that basically tries to figure out a company's quality, growth, etc. All that works is handled by the Schwab management team with a tiny expense ratio of 0.06, meaning that for every $10,000 that you put into SCHD, you owe 0.06 divided by 100 times 10,000. For each $10,000 you put into this ETF on an annualized basis, you only owe the management firm $6, which is not bad compared to other management firms, that ETFs that want you to pay a lot more. So what happens when you buy and compound? If you invested $500 into Schwab U.S. Dividend Equity ETF, which is SCHD, and held it for a decade with a 12% annualized return over that span, you would end up with roughly $1,550. That's not a huge sum of money. But if you added $500 each year, you will end up with over 10,300. You might argue that $500 a year over a decade is a lot of money. It's a lot more money. That's true, but you have to put it in a original $500 and then add $5,000 on top of it. The rest of the gain, roughly 4,800, was driven roughly by the market. That's the power of compounding. So it has a chart right here. I'm gonna take it a step further. Let's say you just only gonna buy SCHD, which is this. You see right here, I'm at $5,000, and I'm continuously add on to this bad boy on a monthly basis. I'm adding roughly 125, 150. I know some people they're adding $250, $500 a month into SCHD. Hey, uh, one of the perks of SCHD is that just like any stock, when you hold SCHD for a full year, then the dividends that come out of SCHD is now its long-term capital gains rates, which is at 0% or 15%, depending on how much you made in terms of capital gains in that year. That's very key because the dividends that you receive from REITs are not cannot be taxed at capital gain rates of 0 to 15%. SCHD can, right? Now, mind you, check this out. I'm only 36 years old. I want to plan to retire at 50. And this bad boy has been increasing its dividend roughly 10 to 11% per year. But let's go back to the example. You're gonna start out with a starting principal of $5,000. That's what I'm doing. You're gonna put $10,000 a year. $10,000 a year comes out to, I think, $850. $10,000 per year comes out to $833. Let's say you did $850 per month. That's it. 10,200. Let's say you do 10,200, which breaks down to $850 per month into SCHD. You're starting out with $5,000 into SCHD, and you're investing $850 per month into it. SCHD has a dividend yield of 3.6%. It increases its dividend by 10% and has a annual share price appreciation of, let's say, 4, right? Calculating that. At the end, boom. It's saying that your overall portfolio balance of SCHD should be around $3.3 million, and it should be paying you over $692,000. Let's say for me, for example, right? Let's just say for me, for example, I want to retire in 20 years. If I was to do this consistently, because I'm already at the 5,000, do this consistently, I would be able to have an SCHD pay me roughly $60,000 per year. That is a portfolio balance of roughly $645,000, paying me $60,000. That's with this example. Paying when you put $850 into SCHD per month. I'm not doing that, and so what I'm planning on doing is that I'm putting roughly a 125 to 200, depending on my budget, on a monthly basis. I'm going to let that compound, and then I'm going to let my dividend. I'm going to let my growth stocks let those compound at a higher rate, like the SCHG and the VGTs. I'm going to let those compound, and then once it get to a certain point, then I'm going to sell that, live on partial of the proceeds of me selling these growth stocks, and then put the rest into SCHD to live off of. So half of it, I'm gonna let my SCHD continue to grow a compound. put more into it on a monthly basis, and then sell a lot of my uh, growing assets, dump it into SCHD, dump it into more income paying assets like JEPQ and XDTE that pays monthly, and then we're really gonna be cooking. But that's the strategy as I get ready to about to retire. So at age 50, 49, 50, 53. But as of right now, I'm in an accumulation phase, and then when you're in an accumulation phase, you just want to just grow your portfolio. SCHD is perfect for right now, where it's bear moments, bear times when the market is really going down. Uh, yeah, you see the right here SCHD is in the red, but for the most part, these last several days, this today and last week, SCHD was really SCHD and Kroger were really the only two things that was in my portfolio that was in the green. And as right now, Kroger, since it's the defensive consumer staple stock, it's in the green. But for the most part, SCHD was in the green for more most of the time. So right here with this article, just wanted to substantiate. It said that if you put $500 a year, you would be able to have a dividend of SCHD paying you roughly $10,000. Uh, I was able to take it a step further. That why get paid? Why only get paid $10,000 where you can boom you can get paid $60,000 or $50,000 per year, and then have that $50,000 growing at a rate of return of 8 to 10% because the dividend tends to increase between 10 to 11% per year, right? So this is why I'm going all in on SCHD. I'm rocking with it. I'm rocking with my growth stocks on a total return basis, but I'm rocking with SCHD as my dividend play because of the qualified dividend that it pays. That means it's less taxes, and then that juicy 3.6% dividend yield is awesome. Increasing the dividend roughly 10 to 11% per year is awesome, and then having a diverse portfolio of splitting your money for over 100 stocks can't beat that. So that's why I'm going all in with SCHD. SCHD is the king of ETFs. Not like the other ETFs, but make sure you rock with me. Like and subscribe to my channel. I'm back, baby.